not 1 billion, not even 10 billion, but $100 billion worth of investor wealth was wiped out with this single research report by Hindenburg Research on an Indian conglomerate. Hello everybody, welcome to this video on understanding what is, or rather what was, I don't know if they wound up yet, Hindenburg Research and the impact that they created not just on Indian companies but even on global companies across the world. Let's talk about Hindenburg Research for a time being, because whenever you look at understanding what they're doing, how they're doing it, we really understand that they are actually a research firm. Okay, so when they use the term research firm, they're actually putting a lot of money into investing into researching into stocks, probably using high-end financial models, probably looking at giving growth numbers for the future, etc., etc. But they also are a short seller. Okay, so what is a short seller? A short seller is this entity in the financial market ecosystem that is selling stocks without actually owning them. Okay, so they are selling the stocks in an anticipation that when the prices come down, they will be able to cover up the position at a much lower price. Okay, so they sell at a higher price, they buy back at a lower price, and thus they're able to make a nice tidy profit. So this is how short sellers operate. So let's go back in time, not very long ago, in 2023 January, when this research firm, Hindenburg Research Firm, came out with a report questioning a lot of the financial accounting systems, processes, stock prices, etc. of one of the largest business conglomerates in India. Okay, and when the research report was released in India, nobody had even heard of Hindenburg Research. Okay, but the impact that it created on the stock markets in India was very, very high. The companies, the group's largest companies immediately hit the lower circuit. So what do we mean by lower circuit? Every stock market keeps an upper circuit and a lower circuit, which is the range within which the prices can move, so as to avoid unnecessary speculation, unnecessary price manipulation, and thus creating a seamless system wherein prices move in a controlled and regulated manner. So when this research report was released by Hindenburg, the impact of this research report was so negative that many foreign institutional investors who had invested in the Indian stock markets sold out their stocks. Many of them were short sellers, many of them were actual outright sellers. Okay, so outright seller is one who will sell the stock on the basis of their owning in the portfolio. That is, from the portfolio they sell the stock. But a short seller is one who does not own it in the portfolio. They will sell it and they will borrow the stock from any other entity in the system so that they can meet the settlement deadlines. So the short selling in this frenzied short selling in the market, day after day after day after day, literally 5 consecutive days of lower circuit on many of the group's companies, the marquee companies, their flagship companies, resulted into $150 billion worth of net worths of investors' money being completely wiped out. And this is not a good sign. Okay, the sign is that if there is a research report that comes out saying that there are malpractices or there is price manipulation, then investigating agencies, regulators, etc. will follow up on this matter. But in this case, out of a sheer fear factor of what would happen, if the truth comes out to be this way, we find that the investors short sold a lot of their stocks. And when they short sold a lot of the stocks, the prices just collapsed. As prices fell down like dominoes effect, the investors lost so much of money, it became difficult for them to come back. This group was on the verge of actually doing an FPO. An FPO means a follow-on public offering. Follow-on public offering. That means its stock is already listed on the stock market and it is doing a secondary sale for issuing new shares to the investors. So if it is an IPO, it's an initial public offering. If it's a rights issue, it is an offering only to the existing investors. And the third is an FPO, where it is a secondary sale to the general public. So when this company wanted to raise such a large amount of money, almost 20,000 crores worth of money by an FPO, they found that investor sentiment had turned negative because of the research report and the continued frenzied selling of the stocks in the market. The prices of the stocks had fallen down. Investor sentiment towards the FPO turned very lukewarm, turned very negative, and the company then called off its FPO. Come to November of 2024, allegations again were raised. At this point, too, the company was looking to raise money through a jumbo bond issue. I think it was Yankee bonds, it was dollar denominated bonds. And the regulator in the United States said that no, we cannot allow for this kind of a bond issuance to take place, especially since the company itself is under some kind of a scrutiny by an independent research firm. Okay, so the deal over here is that if Hindenburg really found out something great and exclusive and important, then they could have released it to the regulators and allowing the regulators to take action. Okay, and regulators to take action. Remember, I've already uploaded a video on Satyam computers where there was an accounting scandal, and the regulator came in and the company got wound up. It was taken over by another software company called the Mahindra Consulting, and hence the name now Satyam Mahindra and Mahindra Tech, etc., etc. But the regulators do take action. So similarly, a couple of decades ago, Enron had collapsed, and when Enron, the energy power play, had collapsed, regulators came into place and took action. Right? They wound up the company. They even wound up the auditing firm, Arthur Andersen. Right? Arthur Andersen was the auditing firm of that company, and even that was wound up. So, what was the intent of Hindenburg Research to release such kind of negative research reports on one of India's largest business conglomerates just at the time as it was fundraising for its growth, expansion, etc., is a mystery to all. Suddenly, this year, in January this year, Hindenburg goes ahead and announces to the public that it is going to wind up its operations. Obviously, they seem to have made a lot of money from the short sales. They've distributed their profits amongst a lot of the fund managers, and thus there is no need for them to continue to stay in the business. They would have made so much of money just by short selling the company stock and then covering it up in the cash market maybe after a couple of days, and still finding out that the profits that they've made is so humongous that they would not have to carry out any more further research. But what about investors who've lost money in that 1 week? There is a pain factor for them. Their faith, their trust, their hope, their confidence, everything was lost, right, in that 1 week. The importance of being a little muted is therefore very critical in the case of understanding how research is conducted, how research is viewed, and how research is told to public at large. They have, of course, Hindenburg Research, of course, has talked to many other companies. They've even gone against one of the largest investors in the world, Carl Icahn, who's considered to be an activist investor. But the fact of the matter is, when there is so much of, what should we say, flooding in the market, then we have to have explanations, we have to have justifications. And clearly, the regulator is the one who is also taking a lot of action against some of the erring companies, and some of the regulatory requirements are not met. Many of the regulators are very proactive and they take action against such, and therefore it's important that investors, help sustain the markets. Therefore, it's important that the researchers, research analysts, etc., stay not overly optimistic, not overly pessimistic, and not have a vested interest while giving out such kind of research reports. Frankly, even I've been in the markets for more than 2 decades, and I had not heard of Hindenburg Research. You've heard of so many companies' research, but this is the first time I heard it was in Feb 2023, and by Jove, it was like a real call out to those investors, because the kind of bearish trend that followed in this group's companies, market companies, flagship companies, literally multi-billion-dollar market capitalization companies, was unbelievable. And that's how markets work. Markets work a lot on news that is continuously flowing into the markets. And the next market news that we're all expecting is the budget, of course.